Good morning. We will pay attention to the differences in transactions when the two different inventory systems are used. Only entries related to inventory or cost of sales are affected by the two inventory methods. All the other entries are recorded exactly the same whether you use the periodic or the perpetual inventory system. Sales. When the periodic inventory system is used, only one double entry is recorded at the sales price of the goods. You don't record any entry for the cost price of goods. In the perpetual inventory system, two double entries are recorded, one at sales price and one at cost price. When goods are purchased in the periodic, you will debit your purchases account. In the perpetual system, you will debit your inventory account. Returns to creditors. In the periodic system, you can't return the goods crediting the inventory account, so you have to open a creditors allowances account to reduce the purchases, because purchases and creditors allowances actually form one account at the end of the financial year, when creditors allowances are transferred to the purchase account to determine what was the total expense for the year. In the perpetual system, you will credit the inventory account because you are reducing your asset for inventory. Return from debtors. Only one double entry at the sales price in the periodic system, no entry for cost price. Two double entries in the perpetual system, one at the sales price and one at the cost price of the goods. Carriage on purchases, import duties, shipping fees will all be debited, so you create an expense account, where in the perpetual system, all these expenses that you pay when you buy the goods will be debited in the inventory account because it forms part of the cost price of inventory. Cost of sales, there is no cost of sales account in the periodic system. In the perpetual system, we use a cost of sales account during the year when the cost of sales is calculated, and we show the expense and decrease the inventory with the inventory that was sold. Inventory shortages. In the periodic system, you won't record any entry for it because at the end of the financial year, your closing inventory will be less, and that will automatically increase the cost of sales. In the perpetual system, you will credit your inventory account because you want to reduce the value of your asset. What did we learn? When the perpetual system is used, two double entries will be completed for cash sales, credit sales, and returns. So whenever you sell goods, whether it's cash or credit, or there's returns by debtors, you will do two double entries. One double entry at the sales price and one double entry at the cost price. When the periodic inventory system is used, only one double entry is completed at the sales price for the cash sales, credit sales, and returns by debtors. When the perpetual inventory system is used, the inventory account is increased or decreased when goods are purchased for cash or credit, or when goods are returned to creditors. When the periodic inventory system is used, the purchases account is increased when goods are purchased for cash or credit, and when goods are returned to creditors, the creditors' allowances account will be credited.